to A Well-Designed Business. My name is Luann Nigara, and I'm so glad you found this podcast. Together with my husband Vince and our partner Bill, we have grown our company WindowWorks from the ground up. So I know and I understand the challenges you face in running your interior design business. I also know that your talent alone isn't enough to ensure your success. So on this podcast, we talk about strategies and practical steps to help you grow your business. But make no mistake about it, we have our share of fun here too, mixed in with those aha moments that I love so much. This isn't fluff. Nobody has time for that. Whether you are a new interior designer or a seasoned designer, I am here to help you create and to manage the kind of interior design firm that you dream of. It's straight talk and it's action. Are you ready? Let's get started. Hey, it's another episode of A Well-Designed Business, and it's Power Talk Friday. Thanks so much for joining me today. And I'm very delighted to tell you that I have another conversation today about our money. I know that many of us as creatives struggle with understanding all the nuances of money, but we also know that this is the entire key to running a successful business. We've learned over 500 episodes practically now that it is not our talent, it's our talent in business that is the difference between us being able to bring our talent to the world. And you, as my designer friend, are no different. So whenever I come across someone like my guest today, Gerri Detweiler, whenever I come across someone like this that I know can speak to us in our language, the way Peter Lang does, the way Kimberly Merlitti does, the way Michelle William does, when they can speak to us in a way that we can understand this whole money conversation, then I get so excited about having them on the show today. So Gerri has been guiding individuals through this crazy world of credit for more than 20 years. She has articles in several syndications worldwide. She is also the author or the co-author of 5 books. Her most recent book, Finance Your Own Business, Get on the Financing Fast Track, okay? If you remember in my first book, The Making of a Well-Designed Business, I said to you in one of those early chapters that, you not only need a relationship with your banker, but you need to have access to a line of credit. And we talked about that in the book. We're going to talk about that today. And Gerri is also the education director for NAV, which matches small business owners to their best financing options and gives them free access to their personal and business credit scores. So I'm very much looking forward to this conversation with Gerri. Gerri, thanks so much for joining me today.
Thank you so much, Luann.
So, Gerri, we don't talk your language. Okay. Start us off. Are we going to just start by talking about when should we be thinking about financing, or is there something ahead of that you need to just kind of set the groundwork for us on this topic?
Okay. Before I delve into that, Luann, I want to make a confession, and that is I am not a numbers person. I didn't study accounting. That was my worst class in college. I'm not into finance because I love that aspect of it. I'm into it because I like helping people, and I hate it when I see people make bad choices. Just like I'm sure it drives you nuts where you see, why did you put those windows in? You could have gotten something so much better for a similar price. That was a bad choice. I hate to see people make bad choices. And so that's what drives me in my education of individuals and small business owners. So I just want to say it right there. I'm not going to intimidate anyone with any numbers or financial, details. That's not really where I'm coming from. But what I do see, and we see this all the time, this is well documented by all kinds of, government and other organizations that monitor small business, that many small businesses live on very little buffer. So JP Morgan Chase, for example, studied 600,000 small businesses. And you want to guess the number of days of cash that those businesses had available to them on average?
Oh my, I probably 20.
Well, you're very close. It was 27.
Oh my goodness.
Think about that. Think about the fact that anything, whether it's, I live in Florida. We had recently Hurricane Dorian. It didn't even hit us, but it shut down a lot of businesses over Labor Day. They're one of their biggest, days for the tourism industry. There's all kinds of things that can come up, or it could be an opportunity for your business. So you have this great opportunity for a big job, take you to the next level, but you're going to have to staff up. You're going to have to invest in, perhaps some of the things that you need to purchase for that job. And you're not going to get all that money up front. How are you going to do that? So that's why I'm passionate about telling small business owners that even if you want to bootstrap it, great. But have that backstop there, have it available. So when cash is tight and there is a crisis or opportunity, you are in a much better position to take advantage of it. And you don't have to say no to that job, or even worse, close your doors.
Okay, so here's what I want to do. I want to first just cut this apart a little bit to make sure that we're all on the same page. So that's crazy that I legitimately guessed that number. And I'm going to tell you why within 7 days. The reason why I was able to guess that number is because I have had a good billion conversations over almost 40 years in business with peers, with contemporaries who I know firsthand do not have the cash on hand. And so what we're describing, just so when you say number of days the business has cash on hand, what we're saying is that this is the amount, like we talk about on the podcast all the time, our cost to be open number. So this is the operating expenses for our business. And what you're saying is that JP Morgan did this study, and the average number of days a business out there has money available. If they didn't do a single sale, not one bit of revenue, they have 27 days worth of money to stay open.
That's correct.
Right.
Yep.
Yeah.
Yep.
See, we got to be very clear on what we're talking about, because the thing about this is that I have the benefit of all these years of conversations with the VIN man. And I know from doing personal appearances, Gerri, and having these conversations one-on-one, if you don't have somebody like this in your life, sometimes you don't even understand what we're talking about here, right? So I just, and that's the thing. This is safe zone, right? This is a safety zone. We ask all the questions and we make sure we understand. And this is so true, because 27 days is a joke. You could break your leg. It doesn't even have to be a catastrophic thing, but if you're a solo interior designer and you were to break your leg, and let's just say you have to spend the first week at home, and then the next 2 weeks you can't get to job sites, you can't get to this, 27 days goes like that.
It absolutely does. Absolutely does. And I don't want to underestimate the positive side too, that as your business is growing, bigger opportunities come to you. And when those bigger opportunities come, you're going to have to invest to be able to take advantage of them. So that's another side of how having some financing available just makes it a lot easier to be able to say yes.
Right.
It's not going to be easy. We're going to have to figure it out, but we can figure it out, and money is not going to stop us from saying yes.
Right. Like an opportunity could be that you have been working out of your own home for your entire career, whether it's 1 year or 20 years. And an opportunity, like you said, a happy opportunity could be maybe a new little studio. You go to get coffee one day and you see a for rent sign in a place that you've loved and admired and always thought would be the sweetest, cutest little place to do business out of. And now all of a sudden it's available. And you look and you call up and you find out it's, $1,000 a month. And you're just saying to yourself, I want that. And if you have that access to money, or you have that reserve of money, now you might be able to take advantage of something like that, right? With some other planning and other questions, Gerri, we just don't jump in and sign a lease. But your point is sometimes it's for good things, not just for protecting us in crisis.
Exactly. And it really provides you just a lot of peace of mind in your business, as you know from your business and your own business experience, that knowing that that's there and that it's available to tap when you need it means you can focus on the other stuff, and that the money is not what's keeping you from getting through whatever this challenge is.
Exactly. I have to say, there have been many, many times over the years where, it's one thing if you're in business, 1, 3, 5, 10. Maybe you haven't had that crisis moment, or maybe you haven't had that opportunity moment to, really do something that's going to cost some money to build the business, but it's going to happen if it hasn't happened yet. It could be a family member, it could be a neighbor, it could be, a studio, it could be an employee. Maybe it's just onboarding somebody that you just like, I can't let this person get away. I've got to make a decision, and it's going to take an investment on my part from my reserves or whatever, right?
Yeah, exactly. And you just had that great conversation with Taylor and what she went through with her business and having to let go of virtually every employee. And there's a big cost to doing that and then bringing on new employees. There's just so many things that business is not predictable, right? It's not a predictable plan. You're not getting a paycheck from your employer, so you have to really be prepared for these things.
And you find it. I'll bet you do. That's why I guess the darn number. I mean, you find that as new entrepreneurs start their business, that they don't think that they should be looking into having a line of credit or looking into having a company credit card or these things until they're quote unquote a big girl business or a bigger business, right? But this is your message, is to set the table at the beginning, no matter what, right?
Yeah, you want to set your business up for success, and you want to set it up professionally. And that doesn't mean you have to take on a lot of debt. It also doesn't mean you use debt to make purchases that aren't going to provide a return on your investment. So the flip side that I think legitimately some business owners are scared of is, well, hey, if I have this, I might spend it and not be able to pay it back. So you still want to be smart about how you use that money. But as we get into this conversation, Luann, we're going to tie it into also building the credit for your business separately from you personally, so that you can separate your business finances effectively from your personal finances and protect your personal finances from the activities of your business, which may be up and down. So it all ties into this big picture of building a solid foundation as your business grows. And then if we take it one step further, then we look at the podcast interview you just did with Ashley, where you were talking about, okay, you're preparing a business so that in the future, if you decide to make a change, whether it's to sell it, retire, open a new business, maybe become a famous podcaster like you have that ability to do that. And this all ties into that.
Right. So you're referring to Taylor Spellman's episode where she told us about the complete need to let go of her entire firm, save one person, because there was just rampant taking advantage and abuse of mismanaging her monies. And then you're also talking about Ashley Mitchek's recent interview where she was talking about, from the beginning, when you build your business, is to think about your exit strategy and your succession planning and all of these things along it. So I'll put the numbers for these shows in the show notes, but they are both great episodes, and I thank you for bringing them up. So where we want to start here? What do you want to tell us about, should we address first possibly the brand new business owner and the things to set up, or maybe somebody listening 5, 8, 10 years and said, did you do these things? How do you want to take the conversation, Gerri?
Sure. Well, I'd love to talk credit cards first.
Okay.
And I say that because there's a lot of misconceptions and misunderstanding about what cards to use in your business. So a couple things I want to just give you a heads up on, depending on what card you're using in your business. If you open a business bank account, which that's a no-brainer, you need a business bank account. We have found that about 20 to 25% of female-owned businesses do not have a separate business bank account, and it's about 15% for all male-owned businesses. So there are a lot of people out there who sort of, I think what you just alluded to, which is think, well, when my business becomes real, then I'll take all these steps. Now, these are the steps you take right away. You open a business bank account. Right. But then you also think about the cards that you're using. They're going to give you a debit card tied to your business bank account. And that's convenient, great. But one thing business owners don't typically know is that those cards, business debit cards, are the only type of plastic that have no protection under federal law if they are fraudulently used.
Wow.
So if someone gets a hold of that business debit card, it could be an employee, it could be someone else, and they use it for fraudulent purchases, there's no requirements under federal law in terms of the bank making you whole or how quickly they make you whole. So I was in a workshop where a business owner was telling his story. He said, I was in the bank lobby with the app open on my phone, watching the money drain out of my account because someone had compromised my business debit card. Imagine how, with that 27 days, you don't have a lot of time right there, right? So you need to keep that money in your account. So if you are going to use a business debit card, please, please, please at least set up alerts. And pay attention. Every day you're looking at that account, just taking a quick peek, see what's going on, and then talk to your financial institution. Say, hey, what's your policy? If this card is compromised, what's your policy in terms of making me whole? Now, I think a better strategy is to use a business credit card, because business credit cards are covered under the same federal law that covers our personal credit cards when it comes to fraudulent use. So if someone gets a hold of your business credit card and goes on a spending spree, then the most you'll be liable for is $50, and it's rare that you even have to pay for that. So if you think about it, it's the issuer's money, it's not your money, and the issuer needs to figure out what to do about it, not you. So it provides you with another level of confidence and protection, and then it could also provide you with lots of rewards. So I don't know, Luann, do you use a rewards card in your business?
We do. Vinny has got our accounts. I would tell you probably 90% of our accounts. He is very creative with the money. So what he has done is he has set up with, I would tell you 90% of our accounts, where he called them all individually. And he said, if I give you my business credit card and I agree to having you collect the money's due to you the day we make a purchase rather than at net 30 or net 15 or net 10, will you give me X percentage back? Like take like a 2% off on every purchase.
Nice.
So and you know how many people agreed? And then what he does is he uses the Amex card that when that gets paid in full at each month, he gets another 2% off. So we essentially save 4% on 95% of our operating expenses at WindowWorks.
Super smart.
Yeah,
super smart.
He's a brainiac when it comes to that stuff.
And even if you haven't leveraged that 2% discount, which I think is brilliant, and I actually love that strategy, but even if not, you're still getting 2% off, right? With the credit card, and you're getting additional time to pay. So depending on when you time that purchase, if you had timed a big purchase right after the billing cycle closed, it doesn't appear on the bill that's in the mail tomorrow. It appears on the next bill.
Right.
And if you're paying in full, you have almost 2 months to go and do that job, collect from your client and then pay it out of cash flow as opposed to sort of cash flowing your client's purchase. So it also provides some additional cash flow benefits as well.
Yes. Yeah. No, he started doing that after 2008 recession. He started calling around and saying, if I pay, because that was when, coming back in 2009, 2010, a lot of the vendors and companies were still digging out. So somebody who was willing to pay them on the day they ordered their fabric or ordered their whatever, they were willing to make those agreements. And so, and because he had well managed our money going into and coming out of the recession, we were in a position to be able to do that.
That's awesome. That's awesome. Well, I will add one more tip too, and that is that if you're a young business, so if you've just started your business, the potentially good side is that the issuers make the decision based on your personal credit scores, not on your business credit scores. So if you're a new business, as long as your personal credit scores are high enough, and we work with all the major issuers at NAB, and we know some of them go to a 570 credit score. Most of them are looking for low 600, mid 600s for a business credit card. So it's pretty flexible in terms of being able to find a card that works for you. And then they also can look at income from all sources. So if you, for example, have just gone out on your own, your spouse is still working and would help if you had cash flow issues, you could put down their income and that could help you qualify. So there's a variety of ways to approach this, but I don't want someone who's just started or maybe as a young business feeling like, oh, I can't get a small business credit card because I don't have enough business revenue yet. You can rely again on your personal credit and income from all sources.
Okay, that makes sense. And I have a question about the debit card. Is it simply, Gerri, that I understand what you're saying. You're saying if you're going to use it, then open up your bank account on your online and look at at it every day and make sure that there's nothing fraudulent happening, and additionally have the alert set up. But is it simply that you just, the alternate to your point is to use a credit card rather than a debit card? Do we just take that debit card and stick it in a locked file? Or do we say to the bank, I don't even want it? Like, do we need to say, don't even issue it to me, or we just don't use it?
Well, if it's been issued and used at all, then the information is out there somewhere. So there is potential for a compromise. So if it has been used at all, and I hear this all the time. People say, well, I always use it with the PIN number. Well, that's great that you do, but that doesn't mean a crook has to do that, right? The crook can use it without a PIN number and could purchase things online. These numbers they're traded all the time on the dark web. So I would say at least if you have one that's still active and purchases could be made on it, then go ahead and make sure you set up alerts. So at least you're aware of what's going on and you can act quickly. I personally do not have I was self-employed for over 10 years. I still have my corporation, and I personally do not have a business debit card associated with my account. I don't really have a need for it, and I stick to a business credit card because I love my reward points just like you do.
Okay. And just like totally, adjunct question, is this the same as our personal debit card, that you would say from just advice standpoint that the personal debit card is as much at risk, and therefore you would better advise to adopt the same strategy of using a personal credit card and then just pay it in full as if a debit card you're paying as you go? So, or is the personal debit card not quite the same problem?
Well, personal debit cards are covered by federal law, the Electronic Funds Transfer Act. And if you notify your financial institution quickly, then it's $50. It can go up to the entire account if you don't pay attention and read your statements, but usually it's covered. And they do have a requirement to investigate and provisionally credit your account within 14 days. Okay. So you do have this time frame on, at least okay, hey, the longest I'm going to have to wait for them to put the money back in my account is 14 days. And again, many financial institutions are going to work with you on your business debit card. They don't want to lose your money, but I have heard some horror stories. And I just like to say, hey, if you can avoid it, you don't want that scary interruption in your business and mental health, then go ahead and stick with a credit card, which is safer.
So that's odd that the federal government will cover the personal debit card but not the business debit card. It's sort of like, what's the deal with that? That's crazy.
It's actually not uncommon at all. Most of the protections that we enjoy as consumers have not been extended to small business. And what Congress has said in the past, and the attitude they've taken is, hey, businesses are sophisticated. They can afford to hire attorneys and accountants to read everything and protect their business. And we know otherwise that.
Yes, I'm so sophisticated out here. I'm going to tell you right now. It's
like 95% of small businesses are, one person or maybe one person plus a part-time employee. And so we really have to look out for ourselves.
Okay. So that's great. That's a great distinction. I'm actually glad I asked it now. Okay. So where do we go from here? So we have set, I agree with you. I have run into a lot of, unfortunately, small business owners that have not separated their business account. But the idea is that we do it when we start the business. It's not wait until we make 50 grand. It's we open a business, we get our resale ID number, our trading as number, whatever we call it in whatever state we're in. We incorporate or we LLC, whatever it is, we create and we make our entity, and we open our business account, we get our business credit card, and then is this when we want to try and apply for a line of credit? Where are we going next, Gerri?
Yeah. So at this stage, depending on how far along you are in your business, I would say the next step would be to start establishing some business credit. Okay. So there are credit bureaus that operate just like consumer credit bureaus, but most of us don't know they exist. So Dun & Bradstreet is a big one. They've been around since 1850s. Abraham Lincoln actually worked for Dun & Bradstreet back in the day. So they've been around, but it's not on the radar of most business owners. In fact, we've done a bunch of surveys and people just don't know their business credit and they aren't checking it. So you may or may not already be on the radar of these business credit agencies. Experian and Equifax, which you may recognize because they also have consumer credit reporting businesses. They also have business credit divisions. And so one of the things you talked about earlier in the net 30 terms or net 10 terms that you guys are setting up with your vendors, Those accounts are often, so that's where you have a vendor or supplier who lets you get what you need and pay for it later. And again, net 10, net 30, net 60 terms. This is a very common form of small business financing that new business owners often don't know because it's not talked about a lot. It's just not on their radar. But at where you are right now, you can start setting up these accounts. And a number of them will report to at least one of the major business credit agencies. So you start to build a business credit report while you're building your business. And as you do that, you are able to then in turn leverage that for longer payment terms with those vendors or suppliers, or to get certain types of financing that look at business credit. So you're building your business credit while you're starting to build your business. And it's not that difficult, but the confusion and the challenge is that a lot of vendors don't report, or some of them report to one or two. And so if you don't know where to start, you're going to have to find some that will report. And I can give out a really easy resource in the show notes if you'd like that will point you to a few to get started.
Okay, so let me clarify. So, a moment ago where I explained Vin's brilliant strategy, this is because we're a very well mature, established business. But what you're describing is when you're starting your business out, you might think that it's amazing that you get an invoice for a sofa and you pay it in full, or you get an invoice for fabric and you pay it in full right away when you get it, because you're feeling very responsible and you're feeling like I've got the deposit from my client and I've allotted X to my profit account, X to my tax account, X to my operating account, and X to my cost of goods account, and I take that cost of goods and I pay for it. But what you're describing is we want to intentionally select X amount of accounts. We want to verify that they are accounts that are going to be reporting to D&B and to Experian and Equifax. But we want to intentionally exercise our credit there. We don't want to go beyond our credit, but if we have net 10 terms or net 30 terms, you're saying use them and exercise them so that you get this report that says Sally Smith Designer is an awesome, business person, and she can be relied on to pay her bills because here's the proof in 12 months of credit that she's been exercising. Is this right?
Yes, correct. And so you can pay it quickly if you want, but it can be very beneficial for your cash flow to take advantage of net 30 or net 60 terms, because you aren't always going to get paid up front for the job, right? You'll get a deposit hopefully, but then you're waiting on some money. So the goal is to maximize your cash flow so that you're not having to put out a lot of money and then hope that your client pays on time, which we know they don't always pay on time, right? And there's problems and disputes and things that come up. So by leveraging that, you're doing two things. One is building business credit, and two, managing the cash flow of your business effectively. But even if you just get those terms, you get net 10 terms and you pay immediately so that you're not worried about it being paid late, that payment history, if it's reported, helps you build business credit, just like your payments to your car loan and your credit card on the consumer side help you build a strong consumer credit score. Okay,
so to clarify, if I say most of our fabric vendors and so forth are going to be net 30. That's like pretty standard in the industry, right? So what you're saying is whether I pay in full the day I order it, like we do at Window Works, again, mature business, or I pay within net 30, that is beneficial to my credit rating. I don't need to carry a little bit of credit for the credit raters to see, oh, she actually has the option of net 30 and she never goes past net 30. They don't recognize whether I pay it at 29 or I pay it at one day. Is that what you're saying?
Correct.
Okay.
Correct. Well, it's for the most part, D&B, you can actually earn a little bit higher paydex score if you pay early, but for the most part, as long as you pay on time, you're fine.
On time, 1 day or 30 days, it doesn't matter.
But I do want to point out with business credit, it's a little bit different than personal, because with personal credit, if you get busy and you forget to pay that credit card bill and, oh, shoot, I forgot to pay it, you pay it 5 days after the due date, it doesn't show up as a late payment on your personal credit until you're 30 days late, right? They usually put it in 30-day buckets. And with business credit, they use something called days beyond terms. So if you had net 30 terms with that fabric supplier and you paid on day 32, you would be reported to the credit bureau as 2 DBT or 2 days beyond terms. And so it would show up in a more granular way on business credit. So I encourage, especially when you're building credit, that you really try to have systems in place so you pay on time. And if that means you pay it right away so you know there's no problems, that's perfectly fine.
Okay. And then, there's so many of our services now that are set up on auto pay. So for instance, maybe it's Hootsuite or it's Canva or it's My Domo Studio, and these are recurring services that we need and use to run our business. When something is set up, say a service that you're using is $45 a month, and you're going to need it for the next billion years you're in business, and you've given them, whether it's however it gets debited from your checking account, credit card, whatever it is, do you get credit for that timely payment in the eyes of the credit agencies? Or are they like, that's happening while you're sleeping, sweetie, you don't get credit for that?
It's such a great question. You're just asking the best question. So it is, the issue is that those typically don't report. So they don't report to a credit bureau. And so you don't get credit. Now, there is a service out there, eCredible, and we can, again, link this in the show notes. What they will do is for a small fee, they will verify bills you're already paying for your bills, like your internet, your cell phone, your utilities, et cetera. And this could be true if you're working from home, as long as you attest you're using it, for your business purchases. And they will add those to your business credit up to 24 months worth. Wow. So it is possible, if you're building credit, to get some credit for those bills that you have been paying and that are on auto pay each month. So that's kind of an intriguing twist to this that I didn't even know was going to come up, but you asked about it.
Yeah, well, I like that because, look, that could be $1,000 a month between all those little services. Why shouldn't somebody know that I'm not a deadbeat and I never send it late? Just because it does auto pay, it's still my money coming out. It's my dollar bills. I mean, so yeah, I want credit for that, So, yeah. Okay, so that's eCredible. We'll put these all in the show notes.
Great.
Okay. Awesome. All right. Okay. So the first step is get our bank account going. The second step is to establish business credit. And so do we turn around and be like, for instance, Cravit, would I just call Cravit if I'm a brand new business owner and say, do you report to Dun & Bradstreet? Do you do this? So I want to make sure that at least some of the vendors that I'm using are reportable or reporting agencies. And what if I find that the first 5 ones that I use all the time don't report? So then my thing is to go to this eCredible and at least get credit for my internet and my phone and stuff.
Yes, and the other thing is, like I mentioned, we can put a link to a list I have of vendors that provide all kinds of stuff, like Keurig cups for your office, or trash can liners, or shipping labels, or boxes, shipping boxes, and things you would use anyway in your business, and that do offer net terms and do report to credit, do report to business credit. So we can put those in the show notes as well. So if you're the vendors you're dealing with right now, the other thing you may encounter, depending on how long your business has been in business, and depending on how whether you've already established business credit, is you may find that you have to sort of work your way up. So some vendors may be, well, you're too new. We want to see you make some purchases before we'll extend you terms. Or maybe they'll say, well, hey, we'll start you out with net 10 terms and then call us back in 6 months and maybe we can go to net 30. So sometimes you have to work your way up the ladder with building these vendor relationships, but most of them do check business credit reports. And so once you've established that payment history with other vendors, most who do offer terms are going to be happy to, because if you think about it, it's not just that you're buying from them, but that you're locking in this relationship, right? They know if they're giving you those net 30 terms, it's going to be hard to get you to go somewhere else. It's going to be harder to get you to go somewhere else because you're part of they're part of your business now. Right. And so it's just one of those things that can help you in a variety of ways.
Okay. I love it. Okay. So step 3, we've spent some time, a couple of months or a year or so, establishing our business credit and taking care, and we've got our personal and our business finances separated. What do we do next, Gerri?
So then I would look at getting a line of credit. I think
Okay.
what we talked about at the beginning of the show, which you did in your business, is very smart. And that's so you have that available for those times when cash flow is tight, when a client's paying slow, when you have a large outlay of expenses, seasonal changes, whatever it may be, you have that to fall back on. I would probably start by asking my local bank or credit union where I have my business bank account, but maybe look a little bit broader if it turns out they can't offer you. The top tier financing you're going to get, the best interest rates and the best terms are going to come from banks and credit unions. I mean, by far.
Okay.
But some of them have minimum requirements. Like we've seen, especially since 2008, because of more regulation, that many have pulled back on smaller loans and smaller lines of credit. And so they have a lot of expenses to underwrite these. They may say, hey, unless you want at least $250,000, we can't help you. And don't take it personally. It's not you. It's the regulatory environment they live in. But you may have to extend and look a little bit further to other financial institutions in your area or perhaps an online lender.
Right, because we don't really need, if we're relatively, whether we're new or old. I mean, look, if our cost to be open number is $60,000 a month, we don't need a $250,000 line of credit. That's just overkill, right?
Yeah, unless something's coming up that you are anticipating.
Right,
But
we're
then
going to
you
do a
may or may not
renovation
want a
or
line
something.
of credit.
Right.
Yes.
But for regular people who are responsible business owners that are just trying to set up their ducks in a row, and they're doing all of these things that we're saying, separating personal and business and blah, 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 and opening a line of credit to have that cushion for positive and negative influences in our business. We don't need a line of credit that is like 3 or 4 times what our cost to be open for a month number is or for 2 months number is. So, and by the way, that's a great question. If we have access to whatever we could, what do you suggest asking for? If it was up to us, and I know it's not going to be, sometimes to your point, it's going to be the combination of all these things and also the bank or the credit union's own laws and so forth. But what is the recommendation on a line of credit, and how do we analyze that for ourselves, what our need is?
Well, and I think that's the hardest question for many business owners when they need to borrow is how much do I need? And the most common answer is as much as I can get, which is not a great answer. So I think this is where I really encourage the business owner to have a partnership either with their accounting professional, or if they don't have an accounting professional who maybe just does their taxes but can't provide this kind of advice, with their small business development center, it's a free service funded through the U.S. Congress to help small business owners, and they can sit down and help you figure out, okay, what do I need, what going forward, and your banker could be help here too. It just depends on the relationship with the bank. Some banks, they're going to farm everything off to a central office in another state, and you don't really get the kind of hand holding that you want. Other banks, your commercial banker may have been doing this for 25 years and can help you sit down and run the numbers. So don't be afraid to ask some questions, because I've talked to some bankers who have said, one of the things I see is that people don't ask for enough. I can project out and see that based on their growth, they're going to be in trouble in about 1.5 or 2 years. And I want to see them succeed. I don't want to see them fail when they run into a cash crunch. So I know it's intimidating, and I know there's sometimes this fear that, hey, if I ask too much or too little or too many questions, they're going to see I'm high risk and see I don't really know what I'm doing. But that's their expertise. That's their wheelhouse. And they want to make loans to companies that are going to be able to pay them back. That's how they make money.
Right. And the thing is that a line of credit is different than an actual loan. A loan, we take that money and we have payments starting the next month to pay it back. A line of credit is money that, sits against our name, and it goes into the pot when we go to do other things like buy a car, because it's money that we have access to. But we only use it when we need it, and therefore we only pay on it when we've used it.
Yes, and that's the beauty of a line of credit, is that it's there for those cash flow times or those things where you need to borrow, but then you're going to pay it back in the short term. Now, if you were saying, well, you found that, let's say that office space the showroom space that you just talked about, that was your dream showroom space, but you're not going to rent it, you want to buy it. Then you look at commercial real estate, but there's also an SBA loan program. So it's funded through the Small Business Administration, again, through our taxpayer dollars. And these loans are super attractive. They combine money from the SBA at a very low interest rate, money from a community development financial institution, and then a down payment from the owner. And the interest rates can be super, super low on these, and they're very predictable, easy loans to pay back. So maybe you find that space and then use half of it for your showroom, and you lease out the other half while you grow your business to expand to that other half. It has to be 51% owner occupied. But there are these options out there that are can be very, very attractive for the business owner if you're asking a lot of questions and looking into this and giving yourself time to make that decision. If that property is up for sale and you need to put money down on it tomorrow, you're not in as good a position as if you had already been pre-qualified and you knew where the money was going to come from, and then you could make an offer and negotiate with the owner.
Right. Okay, so two separate things, right? So we're going to make a capital investment. We're probably going to borrow that money straight out, and you're making the recommendation not to forget about the SBA loans because that is something that our government has set up for us.
Yes, absolutely. Okay. And there's other loans too. There are working capital loans through the Small Business Administration. There are even micro loans through this SBA, which are loans for $50,000 or less. So these are smaller amounts of money, but they could be just what your business needs. And they could, and especially if your business has had trouble getting financing, that could be a good option because the SBA is not set up to compete directly with banks. They're set up to help borrowers who have a good prospect of succeeding in their business but are having trouble getting financing. And so these loans, there's a variety of these loan programs out there, are there to try to help these small business owners be successful. And they are often overlooked by business owners who just haven't fully investigated their options and know what's out there.
Okay. So when we think about, we have a lot of designers, Gerri, that come to it as a second career. So maybe they're in their late 30s or 40s and sometimes 50s, and they have a whole lifetime of work experience and credit history experience, but it's a brand new business. So I understand that we need to, when we talk about starting out a brand new business with no business experience and no career experience, that we're going to take some time to establish our credit history that we said in step 2. But if we come to it with a lifetime or a decade or 2 decades of experience, we can go right to opening a business, incorporating, and signing on the dotted line for a line of credit to have at our access because we're going to use our whole life's credit history here, right?
Yes. So many financial institutions, especially banks and credit unions, love to check the owner's personal credit. So strong personal credit and hopefully good finances in terms of your bank account balances, you haven't bounced checks, things like that, are going to help you qualify for that small business loan. But ultimately, as you're growing your business, you want to try to move away from that so that so that you have this business credit. Because remember, we talked earlier about Ashley's episode where she talked about preparing your business for sale. If you have a business with a very strong business credit history, that's actually an asset to the buyer because then they know that right away from day one, they will be able to get vendor terms, supplier terms. They may even be able to get a line of credit or financing themselves, maybe financing to acquire your business. So they can pay you more upfront and you don't have to take the risk of taking payments for as long on the back end because your business has solid financials, solid business plan and history and strong business credit. So it's actually quite valuable to have a solid business credit history for your small business.
Okay. I love it. So what happens now when we have, do we need to talk? I think we've pretty much covered, your personal credit that and versus your business credit, right? So you're establishing it, you're creating it all along, you're keeping everything separate. In the beginning, they might access and check on your personal to give you a little bit more leverage when the business is new. But ultimately, these are two separate things. And I have to say, I do know that we have personal credit history, Vin and I, and business, but I don't think there is a single thing we've ever done business-wise that they haven't accessed and pulled all of our personal credit and made it part of the decision. Like, it just never, you might run it separately, but it never goes away from you. Like, they're always, if a bank is going to give us $500,000 for renovation, they're checking what our personal finances and our credit history is.
Yeah, like I said, banks love to check personal credit. And even with an SBA loan, it's going to be a factor. But chances are, if Vin really wanted to extend 120 terms of the supplier, they'd be checking the business credit. And anyone can check your business credit. So if I wanted to, I could go on after we talked and check your business credit. I'm certain it's going to be very solid because you guys, handle your finance as well. But that is something to understand as a business owner, that anyone can check your business credit. So you could have a potential large opportunity, or someone thinking about acquiring your business, or someone who wants to come in and partner with your business. They could be checking your business credit, and there's no requirement that they tell you. They don't have to get your permission. It operates just completely without any kind of limitations to access at all.
That's a little weird.
It is a little weird, and
that's icky.
It does feel a little bit icky. I don't disagree. And I can tell you that our founder of NAV, where I work now, Levi King, he had that happen. And he had a sign manufacturing business where he had competitors pulling his business credit and then using that as justification on jobs he was bidding on to say, hey, hire us instead of hire him because he's got these things on his credit. So he went through it firsthand. But on the other hand, Luann, this could be valuable to you. So you could be going and taking on a big client where they want to, take the payment over time, or you could have someone approaching you again as a business partner. I would highly encourage checking their business credit. And I'll tell you a quick story from Levi's experience. This was signs, but it could have easily been interior as well. He had a ongoing contract with a local chain of Mexican restaurants, and he would do big build outs on the signs, and they were opening new locations, and the owner was super slow about paying, always dragging it out. And it was just a headache for him cash flow wise. So finally one day he said, I'm going to fire this guy. So he walked in the next day, said, here's how much you owe me, pay up, or I'm not doing any more business with you. And it turns out this business owner had burned his bridges with every other sign manufacturing company at any reasonable distance, and had no choice but to catch up on payments and then pay on time going forward if he wanted to keep opening, his restaurants. So a big job isn't a big profit until the money's in the bank, right?
Right.
And it doesn't always happen the way you think it will happen. So if you have a big job with a business, a commercial client, you can check their business credit. If you see red flags, you might ask for a bigger deposit. You might make shorter payment terms. You might choose to not to take the job and not be the one with the headache. But that's something you should be aware of.
That's interesting. You know what? I don't like it if they could use it on me. But the thing is, you're right. If you check us, you're gonna get good information. But I hear you. At WindowWorks, we will do $150,000, $200,000 awning project, and we have never considered to check their credit history to see what their terms are like and what their payment history, I should say, is like, because it's never until they have missed a payment then we are all looking at each other going, how did this happen? You know what I mean? And so that's interesting, because as we have grown in the last 2 years, we are taking on more and more six-figure projects on a regular basis. So I'm going to have to tell the Vin man that he can check other people's credit.
You are.
Okay. So, but the thing is that the bottom line of that is that our personal, from a banking standpoint, our personal credit can affect what we get and what we access as a business. So we need to be aware of it, is the point. Now, it may not affect whether we get to open up an account with a vendor, but from a banking standpoint, it's always going to be considered. And therefore, I mean, like I'm telling you, Vinny, his refrain is, our personal credit's in the 700s. How are you possibly not loaning me this money? You know what I'm saying? It's like, this is the refrain. You watch him walking through the halls of Window Works, like rubbing his head.
Right. Well, and we talked earlier, Luann, about credit cards. And one big mistake that a lot of business owners make, they use their personal credit cards, or they use a business credit card that reports everything to personal. And so they make a big purchase, they max out that credit card, and then they don't realize that's showing up on their personal credit, bringing down their personal credit scores. If they had chosen a business credit card that didn't report to personal, then that activity would be completely separate, keep the personal credit score strong for when you need it, but it isn't an automatic impact on your personal credit card. And that's personal credit report. And that's one of the things I hear all the time from business owners, that I didn't know this business credit card was going to show up on my personal. I didn't know there were other options.
Yeah. How do you know that, and how do you avoid that?
Well, you read my article that where I listed
you wake
all
up from the coma that you're in, Luann.
Yeah, we will put that in the show notes. But I've actually queried all the major small business credit card issuers. I've listed which ones report to business and which business bureaus they report to, which ones report to personal. Almost all of them will report to personal if you don't pay them. So if you default, it's going to show up on your personal credit, but many of them do not report to personal unless you default. So you can keep the activity of your business separate from your personal credit history and preserve your credit scores in the process.
Okay. All right, good. All right. And so, what else do we need to know about this? Sometimes I don't even know what I don't even know yet. So what else do we need to know? Like, I think what I want to really just have a few more moments on is this setting up the line of credit. So if we are a mature business and we are 10, 12, 15, 20 years, and we have managed to get through without ever having set up a line of credit, what would you say to somebody? Would you say, I still think it's not a bad idea for you to do this. If you have your bills are paid, you are with good credit reports, you do have all of the basics, truly locked down, everything is separated. This is just that level of insurance for the good or the bad that might happen. And if somebody said to you, yeah, after 15 years without it, I don't need it. What would you say, Jer?
Well, I'm not going to tell them, hey, you have to do this, but I am going to encourage them to think about what if there was some sort of, interruption in the business. And we've given plenty of examples here today where things just don't go as planned. It could even be something like a divorce, where suddenly you're trying to divide up the business and the spouse wants to be bought out of, what the assets are in the business. I mean, there's just so many different scenarios that can come into play. What I would say is that the great thing about lines of credit, which we talked about, is the fact that you don't pay interest except on what you use. So you could you could use a minimal amount just to keep it open and active, but not pay a lot in interest. There is typically an annual fee, but it's usually very, very reasonable. So I would say an annual fee of $100 would be maybe typical on one of these lines of credit. So it's not a large amount of money. So I think it's just like an insurance policy with your business. You set up these other things to make sure that you have that protection, and this is one of those things, because we all know the saying, right? You can't borrow money when you need it.
Right.
You can only borrow when you don't need it.
I know.
That's when you want it.
Yeah. Well, I was curious your answer, because I know that, Vin has taught me that he is a huge believer in having it. And to him, it's a non-negotiable. It's like, we have a line of credit. That's it, period. And when we need it, we use it. And when we don't, we don't. And but to him, it just would not make sense not to have it. And so sometimes I wonder if my belief, because I trust him implicitly, is, like you're an outside person, right? It's like I'm checking the VIN man is what I'm doing. Like, is he right about everything, Lou? That kind of a thing. And then the other thing is, and I want to know if it's still a thing that happens, because this did happen to us many, many years ago. We opened the business. We had a line of credit because he knew that this is what he wanted, and he had 2 previous businesses, so he was, able to get approval for it. But we didn't use it. And we didn't need it because we were good. And 2, 3, 4 years, whatever it was, went by and we had never used it. And then we're sitting there making a big decision in our business. I think we were going to buy a building. We were 7 years in business, all coming back. We were 7 years in business. We had been renting. We decided we were going to buy our first building. And he's sitting there going through the chess game of the money in the checking account and the money here and, the line of credit money. And he's figuring it all out. And we had thought that there was something like, I want to say it was like $85,000 on the line of credit. And he was like, well, if I access that for the renovations or whatever it was, the thinking was. But then when we went to put things in motion, the bank was like, yeah, that line of credit's like 18 grand. And we were like, whoa. And basically they had just been reducing it year by year because we had not used it. And I don't know if that's still a business practice now, because I'm going back to the 80s and the 90s. And so from that point on, we had to build it back up again. So we would just go borrow $5,000 and then pay it back. And then the next time, just 3 months later, we would borrow $10,000 and we would pay it back. And then finally we pushed it and we were like, hey, this $18,000 line of credit isn't going to work for us anymore. Can we have 40? And they're like, yeah, you pay so good. Let's give you 40. And now we're back up to the 6-figure area that a business at our level needs. But is that still a legitimate thing? Do we have to caution people that to open it, but then to intentionally use it and pay it back so that they keep it? Or is that not the way the world any longer?
No, I would definitely recommend using it, even if it's just small amounts and paying them back over the course of the year a few times. And the reason is most financial institutions, as I mentioned earlier, they have high compliance costs. So they're not interested in just keeping it open for someone who's not going to use it. And then typically they review it each year. So they can review it to see if there's any red flags. I was in a workshop with a commercial banker who said, yeah, every year we would pull the Dun & Bradstreet report on our line of credit clients to see if we saw any red flags, like maybe a tax lien or collection accounts or something that had popped up that we weren't aware of when we extended this loan, and then also to review it for activity. So it's a very common occurrence that once a year, usually around the end of the time the year that you borrowed it, they will take another look. So it's just like your credit card. If you never use that credit card, eventually they're going to close it. Retail cards, they close them more slowly because they still want you to shop there. But generally, if you don't use it, you're going to lose it. Right.
Okay. So that, it happened to us and I didn't know if it was still true, but now I understand why it's true. So now I understand it's not a change in thinking or whatever. I can get that. What you just explained is it costs them money to have the money available to us. And if we're not going to use it, then they need to move it around and make it available to somebody else that will use it and they can make money off of borrowing that money to them.
Yes.
Yeah.
Yes.
Right.
Yep. I think you guys are doing it right. And I want to encourage more business owners to really understand that this is just part of the process of building a legitimate business. And it's one of those steps you take, even though it doesn't seem like the fun part.
Right. And then I have 2 random questions for you that really don't have to do with this exactly. So it may or may not be your wheelhouse, but we have a lot of designers that will resist accepting credit cards from clients because of the percentage that they pay. And I know that for us personally, I get it. We're a mature business, but I also know that from day one, we were just like, this is a cost of doing business. We're taking a credit card from somebody. And of course, we're talking about in the 80s when credit cards weren't, now people they buy milk with a credit card, for crying out loud, right? And so do you just feel like, just get over it? It's a cost of doing business, raise your margin a little bit. I don't mean illegally and charge them extra, because I do think there are some laws where you can't charge. I don't really know, but I'm just saying, just watch your profit margins so that this is a cost of doing business like it is to have to buy gas for your car.
Yes, and it's not just a feeling. There's research behind it. So there is research behind the fact that consumers or individuals who can charge something on a credit card spend more than those who have to pay with cash. And so if you don't want to lose that opportunity from the client, then you set yourself up to do it. I mean, the great thing is it is a lot easier than it was when you started to set up a merchant account and to be able to have an iPad that you can take along with you or you can just set it on your phone, a reader, a Clover terminal or a Square reader or something like that. And you can just take the payment right there where you are. So it's a lot easier than when you started accepting it, but you saw the benefit, and I would absolutely encourage anyone who's not offering their customers and clients that payment option to do so. You're going to make more money in the long run.
Yeah, I mean, we've always found that to be the case, and it's one of the areas when I'm talking with a designer where they push me back on it that I have refrain from just being hardcore. Like, I'm sorry, just do it. Like, I feel that way. And I have said to them, I think it's a legitimate cost of doing business. And I think it benefits you as the business owner to take a credit card. And often, your point is well made that the research shows that people will be more likely to spend more. But I've often, and I know you're going to agree with this too, but the thing that I usually bring up is, don't you as a consumer feel a little bit safer when you make a big purchase with a credit card? Like, right? I just feel like, if I want to go and give a cabinet guy $40,000 for cabinets, I might have done all my good homework and checked his references and checked his, and know that he's got, I've got friends and colleagues that have used him. But ultimately, if I've got a problem with him and I've paid with a credit card, I know I at least have some pull with that credit card company where I can have that negotiation, that arbitration process.
Yeah. Yeah, absolutely. And it also feels like the business is more legit, right? Don't you feel like the business seems more legit if they accept
I do.
credit cards? I don't know. I personally do. So I'm on your side on this argument.
Yeah, I do. And like I said, as a consumer, I just feel like there's only so much checking I can do on you. And that paying by credit card is that last little safety valve. At least I know I can call Amex and say, no, stop the payment.
Yeah. And if I'm going to spend $40,000, I want my miles. I want those airline miles.
That's the other thing. That's the other thing, too, that people just want their miles and so forth, and to make it easy for them to get it. Okay, that's awesome. So, Gerri, I have to say this has been such a treat for me because, of course, I do have the benefit of being able to ask Vin a lot of these questions, but it's nice to, not only for me personally to get confirmation on how smart the guy is, but also to show other business owners that it isn't just because our business is mature that these things are available or these are good practices, that it is the way you start your business out the gate. And we do say on the show often, run your business from the beginning like it's a big business. But I also have known in my conversations with designers that they can sometimes be 5, 8, 10 years in and not doing some of these things and taking care. So I really appreciate your explaining the nuances, a lot of this. And do me a favor. I know that you have some resources for us, and I want to make sure that everybody knows how to reach you and how to access, your blog articles and all the other information that you put out on these topics.
Sure. So you can check us out at nav.com. And if you go to /podcast, there is a business credit checklist you can download for free there. And there's also a coupon code if you want to try a premium Nav account. The code is podcast for that. We did just start that if you have a paid Nav account, many of our customers use our free account. That's perfectly fine. But if you have a paid account, we just started reporting to all 3 business credit bureaus. So it's a way to help also start building your business credit. But Nav is essentially like Credit Karma for small business. So you can check your business and personal credit for free. And if you don't have business credit, we have a tool in there that will walk you through the steps of building business credit and help you get your business to that next level.
So now I have to ask another question before I let you go. So what else does Nav do for small businesses? I see you said it's like business karma for small business. What are the services? So you have the free services and then you have the premium. What are some of the things that business owners access at Nav?
Well, essentially, what we're trying to do is help you use your own data to find better financing offers. So, we work with all the major business credit card issuers and lenders all over the country, and we'll show you offers based on your business and personal credit data. You can link your bank account just for read only to demonstrate your revenues, and then we can show you financing options, giving you a match factor score to help you understand which ones are a good fit based on your qualifications. So, while seeing your business credit and building business credit is great, ultimately, what we're trying to do is make it easier for you to find financing when you need it.
Wow. And this is strictly business financing, not personal financing.
We do have some personal credit cards, and I think we may have a couple personal loans because some business owners do use them. But for the most part, we are focused, our audience is small business owners. We have over 1 million who are using our platform.
That's awesome. I'm going to have to tell the VIN man about you.
You will.
Okay. Well, Gerri, I can't thank you enough. It has been such a joy to have you on the show. And you can hear the smile in my voice because I really do love it whenever I come across somebody that really can, in an informative, non-threatening way, explain this aspect of our business to us. And you did exactly that. So thank you so much for joining me on the show today.
It has been such a pleasure, and I love what you're doing, so keep up the great work.
I just love this conversation with Gerri. I thought that there was a ton of really useful information for all of us entrepreneurs, whether you are a hashtag baby designer or a hashtag rising designer or a hashtag seasoned designer. Don't you agree? And I have to say, I recommend, if most of this information was new for you, that you should do two things. Go get the free resources that Gerri offered at nav.com/podcast. All right. And then I have to say, I really do think that this show is worth a listen a second time, except the second time with pen and paper. I'm in business 38 plus years, and I learned a few things during this conversation. And the truth is, a few more when I re-listened to it in editing. It was like, oh, I missed that the first time. So before I share the top takeaways, I want to ask you a question. How open-minded are you in general as a human being person? And second question is, how open-minded are you about how to make more profits in your business in 2020? Would you say that you were an open-minded person? If you would, how much thought have you given to taking our new class in 2020, Profit with Window Treatments? I mean, if you're really open-minded, you would have at least had to consider it by now, right? Now, I know firsthand that the profit margins in window treatments, and I also know firsthand that particularly when you offer custom window treatments, Roman shades, drapes, motorized treatments, that these are not exactly shoppable. You're not exactly putting this in an internet search and coming up with something that you can click and buy. There is way too much nuance, way too many variables. A single accoutrement, such as a band of trim, uniquely selected by you to coordinate, contrast, or enhance the decor, changes everything and therefore changes the price and therefore makes it not comparable. All right. So imagine after 8 weeks in this Profit with Window Treatments class that you would have a baseline understanding of the costs attached to window treatments, the information on the styles, the yardage calculations, and a working knowledge of motorization. Imagine you know enough to speak with confidence to both your client and your window treatment vendor. And if you already have all that going on, imagine how after 8 weeks you will feel so good about your window treatment knowledge that you sell bigger and better projects. Understand this. The average custom window treatment project is about $4,000 to $4,500. So I'm not talking about being knowledgeable enough to walk into a box store or a pottery barn. I'm talking about knowing how to design, specify, and sell high-end custom to your clients. I'm talking about having the knowledge and the peace of mind that you can be an active partner with your custom window treatment retailer or workroom. I know that designers are leaving money on the table because of the complicated nature of window treatments and because of the liability. They're just so expensive. But I also know that designers increase their project gross numbers by the thousands per room simply by being the one to sell the custom window treatments to their clients. So, are you open-minded? One window treatment sale could quite literally cover the cost of this course. 10 new window treatment sales over the course of 2020 could quite literally earn you 20 times investment on this course. Okay? With this class, you will achieve two things. You will create even more beautiful spaces for your clients, and you will add revenue to your firm. Go to profitwithwindowtreatments.com. And if you'd like to know more about Vita, my class instructor, search Window Treatment Fridays in my podcast search bar on my website. And a big thanks to Kirsch.com for sponsoring the WTF shows. You can hear how smart Vita is in these episodes, how passionate she is, and what an absolute pro she is. You will be in good hands in this course. And of course, I'll be in the Facebook group for this particular course, and I'll be popping in for a session or two during the 8 weeks. All right, now, my takeaways from the episode with Gerri. Number one, have a separate business checking account. I know for many of you, this is already covered, but I also know for many of you that you have skipped this. If you are one who has skipped this, this is your number one to-do item. Go open a business checking account, all right? You'll need to bring your EIN number and your business entity papers, your LLC, your S-Corp, whatever entity you are. And by the way, tiny little step backward, if you have not established an entity yet, then you need to contact my friend Jamie at #legal.com, and she'll help you get done this ASAP, way easy peasy, okay? Then the next thing you need to do is get a business credit card, right? Use it, pay it off every month, and check your account every day for errors and fraud. Number 3 is get Gerri's list of vendors that you can order your everyday office item things from on a net 30 basis so that you can establish business credit. I also know that you can easily set up net 30-day terms with Kravit, all right, our other show sponsor. So if you have not opened your account with Kravit yet, do that. Ask them for net 30, okay? They might ask you, if you're brand new in business, they're going to ask you for some references. Give them whoever you have done work with. I don't care if it's your bookkeeper, anybody. Just do it. And a conversation, if it's not enough, a conversation will ensue, okay? But then what you can do is right away you can place your order for fabrics, trim, and wallpaper, and you can make sure that you pay on time, right, within the 30 days. But then you get to start to create a stellar business credit score. And the fourth thing that I take away from listening to Gerri is, if you are a commercial interior design firm, how amazing to know that you can pull the credit score of a potential client, all right? And then what happens if you, like we talked about in the show, if you learn that they are a not good payer, is that English? If you learn that they don't pay their bills on time, you can either decide to decline working with them, or you can decide ahead of time to give them different terms, all right? Maybe you normally take 50% up front. Maybe you, whatever it is, but you can adjust that, okay? You can say you want 100% in full up front. You can say you want 80%, whatever it is. The point is that you set the terms for your company and your projects, and it's all A-okay as long as you inform the other party before engagement, right? They don't have to agree, but here's the thing. If you know that they have not such a great credit history, you don't really care if they don't agree to terms that you can't abide by, right? Now, for the rest of our advice, like I said, go back with a pen and paper and listen again. Now, if you are listening to me in real time, we are days from the new year, days from 2020. Just saying it is insane, okay? Here's to making all your intentions, all your goals, all your visions come true in 2020. You know how to do it, right? You have to decide to be excellent. Thank you so much for joining me again today. This podcast is a production of WindowWorks, your resource for custom window treatments and awnings. To learn how we can help you on your next interior design project, go to www.windowworks-nj.com. And if you're interested in working with me on your business, either through masterminds or one-on-one coaching, or you want to know how to get my book, The Making of a Well-Designed Business, or you just want to know what's going on in the podcast land and where I'm going to be, all of that is found at luannigara.com. Thank you so much. Have an excellent day.